It's been a couple of weeks since I've released a stock pick video, and I know just how much the audience enjoys this type of content. So in today's video, we're going to be going over two high growth stocks, one Canadian and one American. So I really hope you enjoyed today's content. If you do, please make sure to drop a like and let's get right into it. Hey, what's going on everyone? It's Griffin here, and I hope you're all having a great day as always. If you're new here, then welcome. On this channel, we speak about all things investing, from company analysis and stock picks like in today's video, real estate, stock market news, and so many other topics. So if you're looking to grow your knowledge and wealth through investing, then make sure to subscribe to the channel and hit the bell button so that you're notified whenever I release new content. Like mentioned, today we're going to be looking at two growth stocks, so let's get right into the first one. And by the way, if you're still looking to open up your very own brokerage account to start investing and trading stocks, then make sure to check out one of the two links down in the description to open either a Wealthsimple trade or a Questrade account and get some free money for doing so. Alright, so the first stock in today's video is a company that I honestly never really thought I'd be featuring on the channel. And the reason for this is that when I first heard about the company a couple years back, I was somewhat skeptical of their overall business model, and I thought that their product offering was somewhat of an expensive novelty item that not really too many people would be using. However, with everything that's going on in the world right now and individuals looking for higher levels of convenience without having to leave their homes, I've revisited this company, and to my surprise, things are going very well. The company I'm speaking about here is called a Good Food Market Corp, ticker of food on the Toronto Stock Exchange, and this is one of the handful of companies that's ventured on into the meal kit in a box food delivery services, which are significantly picking up speed and popularity, especially since the beginning of the pandemic, as individuals and families are looking for convenience at a distance more than ever before. The reality is that in 2020, and with everything that's going on, an increasing amount of individuals want to get their groceries delivered directly to their door, just like pretty much everything else that you can order on the internet these days. Essentially, in parallel to the pandemic that's going on, people have increasingly busy lives and are looking for alternative ways to spice up a dinner and other meals of the day without having to actually think of new recipes, go out to the grocery store, get all the ingredients, come back home, make it all, and all of this combined is a multiple hour process, which so many people are just looking to eliminate altogether. So you may already be aware of what Good Food Market does as a company, but if this is one of the first times you hear about them, it's basically a meal kit delivery service. And the way it works is quite simple in that a Good Food creates recipe menus, and then you as a user can go in and select which meals on which days you want them to deliver directly to your doorstep. Once you're all paid up and the meal kit arrives on your doorstep, all the ingredients to make the meals are inside the box, along with a recipe to follow to make things really easy for cooks of all experience levels. For example, here are some of their current dinner and breakfast recipes. Everything looks really good and easy to make with the included instructions. I've personally even purchased a couple of their meal kits myself in order to try out their product line, and the entire user experience was really easy. You basically just order it online, the boxes arrive at your doorstep in a couple of days, and the meals themselves were really tasty, easy to assemble, and seemed somewhat healthy. The only reason why I discontinued my membership after a couple of boxes, even though they were really good meals, was because I found it kind of expensive for what it was, and since I only live with my girlfriend and we have a really hectic hours, we kind of just eat whenever we're hungry and just whip up meals quickly. So that's kind of the reason why for us it wasn't necessarily a good product line, but for other Canadians who have families or whatnot and steady work hours, well, this can be a great option. Obviously though, for the average individual, cost doesn't really seem to be an issue here because a Good Food Co is experiencing a parabolic revenue growth trends that we'll be speaking about shortly. Let's just take 15 seconds here to go over their product offering so that you have a better idea of the overall price point. So their classic basket pricing will set you back $82 for 4 meals as a couple, and if you opt for the vegetarian recipes, the price is also significantly lower. It's not unbelievably expensive as an overall product, but really what you're paying for is convenience, time, and peace of mind with your meal planning. Overall though, what I find really interesting and exciting for Good Food Co is that this is a company that's riding through massive food industry trends, such as a shift towards vegetarianism as well as meat alternative products, and they're also riding the trend of individuals wanting a higher level of convenience and having things shipped directly to their door. Based on current market and economic trends, I could very well see these types of meal kit in a box delivery services continue gaining massive amounts of exposure and popularity for years to come, and a Good Food Co is definitely at the top of the pack here in Canada, at least, for being a key player in the industry that's going to take up a massive market share. So at the very least, this is a company to keep on your watch list. Let's now dive into the stock quote followed with the financials to see what we're dealing with here for Good Food Co. First off, this stock is trading for $9.36 per share at the time of filming this video during the evening of October 13th, which is up 3.88% in the trading day. This translates over to a market capitalization of $606.286 million, making Good Food a small cap stock, which inherently will have more volatility than larger companies with stable revenues and a track record of earnings. The company itself is not yet profitable, so this is why they do not have a trailing 12 months price to earnings ratio at all, or even a positive projected price to earnings over the coming 12 months. With that said though, this is completely normal for a relatively new company that is in full-on growth and expansion mode, trying to acquire customers left and right through aggressive marketing strategies. In fact, it would have been surprising to see this company pulling a profit at all at this point in their growth phase. Earnings per share are obviously negative at negative 20 cents, and their growth estimates are very nice at 58% growth this year and 20% growth next year. But to be honest, I think this is far too conservative considering their current growth trends and the macroeconomic environment that is leading to increased sales in the first place. What I found very appealing about this company's stock is that even though it's trading right below all-time highs and the company has no profits to show for, it still has a price to sales ratio of only 2.43, which for a growth stock that has rallied this much in a year already is a very low price to sales ratio, and I could very well see this stock continue rallying into the new year or further as winter hits, people increase their spending, and revenues continue skyrocketing to the point where this could very well be a stock that we're seeing trading in the $20 range sooner than later. Speaking of revenues, it would be about time to take a look at their income statement. So starting off with revenues, as I had mentioned, this company is doing a great job to consistently increase their revenues year over year and quarter over quarter, with the most recently reported quarter being their best ever quarter. Now, I am very confident that their revenues for the upcoming quarter will be their best ever once again, since it will be from months June through to August during lockdown period, but we'll have to wait and see. With this in mind though, as mentioned, Good Food Market Corp's insane revenue growth comes at a very high cost of revenue as a result of their extremely aggressive marketing model of acquiring customers right now, consisting of free boxes and significant advertising. So this is definitely something that they're going to need to bring down once customers are on board and they have higher recurring revenue instead of always trying to go ahead and collect new buyers, which has a significant cost associated to it. Now, since the company is still somewhat new though and is competing with other companies in the space, I would expect that they're going to continue having an extremely aggressive marketing play for at least a couple years to come, but from there on they should be able to stabilize their cost of revenues and even bring them down so that they can then trend up into profitability. Alright, so with the income statement now out of the way, let's take a look at their balance sheet, which I'll be honest isn't necessarily the best here. They have assets of $136.02 million, but high liabilities in contrast at $118.935 million. The company's current assets are $90.266 million, which definitely aren't that bad for this size of a company, and most of this is in cash, but their current liabilities of $62.602 million give them a current ratio of 1.44, so this, to be honest, isn't something that I'm a huge fan of. The fact that it is still above 1 is better than nothing, but still, for a company that has such high cost of revenue, I would definitely prefer that they had more asset bolstering in the short term. All in all, even though Good Food Marketplace is trading at near all-time highs, or probably even all-time highs by the time you see this video if the stock does end up going up during tomorrow's trading day, I still think that this is a very interesting Canadian growth stock play that has lots of room for both revenue increases over time as we're experiencing right now, and more users end up adopting this type of meal delivery kit, and subsequently I think that this could very well be a $20 to $30 stock in the next year to 2 years. The second growth stock that we'll be speaking about in today's video is an American company that's been around for decades, but more recently they've been shifting their business focus towards software over hardware. The company I'm speaking about here is Microsoft, ticker MSFT on the NASDAQ, and this is actually a company that I featured on the channel months back when the stock was trading at around $160 per share after the stock market crash in March. Since then, as with most American growth stocks, the stock has rallied by roughly 50% to now be sitting at a share price of $222.86 after hours on October 13th. Now, just like with good food that we spoke about earlier, Microsoft stock is trading at near all-time highs, and even though this could be somewhat unsettling, the reason why I'm optimistic for Microsoft's growth moving forward is due to their diversified portfolio of software applications, both for business and personal use across a variety of different industries. These different facets of software applications that Microsoft is providing include cloud computing, gaming, business communication, operating systems, and so much more, which is allowing Microsoft to reposition their attack strategy for the coming decade. While other tech companies like Apple have taken the lead in hardware, for example, or Facebook still being the top dog in social media, Microsoft has turned mainly towards business software as its main target audience, and it's working. First off, for a business overview and highlights of Microsoft, let's first speak about their cloud computing application, which is called Microsoft Azure. This is their version of cloud computing, just like many other options available on the market, but what makes Azure Cloud attractive to enterprises though is that it's complemented by a huge suite of other business-focused products that all live within Microsoft's ecosystem, making integration seamless. For example, companies can host all of their customer and trend data on Microsoft Azure as the database in the cloud, and then report off of it extremely easily with Microsoft Power BI, which is their version of analytical reporting software. So this is one of the main promising facets for Microsoft moving forward, especially amidst this massive shift towards at a distance and at-home working environments. In the 3-month period ending June 30th, 2020, Azure sales alone grew by 47%, representing $50 billion in revenues over the past 12 months. In contrast to this, Amazon's cloud service grew by only 29% over the same period of time. This now leads me to speak about Microsoft Teams, which is Microsoft's version of an enterprise-worthy internal communication platform. I briefly spoke about Microsoft Teams in my previous video when we covered Slack, which is also a business internal communication tool, and Microsoft Teams is essentially their largest competitor, or should I say the other way around. Regardless though, Microsoft Teams user adoption is growing at an exponential pace, and there is no stopping it, especially with the current working environment. As of April 2020, there were 75 million daily active users on the platform, and this was 6 months ago at the beginning of the massive work shift, so I can only imagine how over the coming couple of years, Teams is going to become a go-to platform for business communication, helping increase the company's top line and adoption rate of their other products. And finally, for Microsoft's business overview, we can't not speak about their strong foothold in the gaming industry, which is an ever-growing industry in terms of revenues as well as user adoption. Just take a look at this insane gaming tournament. Now, this has nothing to do with Microsoft per se, but just to showcase how popular gaming truly is right now and is increasing year over year. And Microsoft is definitely aware of this long-term growing trend since they've never exited the gaming industry since first launching the Xbox in 2001. Gaming is only getting more and more immersive as years go by, with VR now as well as 8K graphics and basically more games than you could ever dream of, which is a gold mine for Microsoft. In fact, in more recent news, Microsoft is releasing their new Xbox consoles in November, and they've also indicated that they will be acquiring ZeniMax Media and its game publisher Bethesda Softworks for $7.5 billion in cash, and this media company has an iconic portfolio of gaming franchises such as The Elder Scrolls, Fallout, Doom, Quake, and many more. Interestingly, gaming remains the fastest growing and largest entertainment industry in the world, at an industry that is expected to be more than $200 billion in annual revenue as of 2021, which is extremely impressive. So all this to say that Microsoft is a company that's positioned itself very well in the tech industry in order to provide massive value to both businesses and individuals, which I believe is going to be one of the driving factors for this company excelling for years to come. Let's now dive into their stock quote and financials to see what we're dealing with here for Microsoft. As mentioned previously, this stock is trading near all-time highs at $222.86 per share, with the 52-week range between $132.52 and $232.86. Now, this market price translates over to a market capitalization of $1.687 trillion, making this an extremely large company. But even considering this, we're seeing nice and consistent growth from Microsoft with no end in sight, in my opinion, based on the info that we just covered. With that said though, as a result of the size of the company, even though I do consider this to be a growth stock, don't expect to see high double-digit growth trends year over year. The trailing 12 months price to earnings ratio is 38.44, which is definitely high for the typical industry, but in American tech, this is right in the median range. In fact, their earnings per share are $5.76, with fantastic growth projections for the company's earnings, leading to a forward-looking price to earnings of $32.79, which is very nice and instills confidence that the company is moving in the right direction with a fair current price point. Now, the price to sales ratio for Microsoft is 11.59, which is a bit pricey compared to the industry, but as a result of their growth trends and considering that this is such a quality company, this doesn't really bother me. And finally, for the stock quote, Microsoft does in fact pay out a dividend of $2.24 per share, translating over to a dividend yield of 1.01. Let's now dive into the most recent income statement and balance sheet for Microsoft to see why I'm so bullish on this company moving forward. First off, in the company's income statement, we are seeing unbelievable growth in revenues year over year and quarter over quarter. In fact, when looking at this data in chart format, this type of massive consistent growth in revenues and net income is the type of growth that produces steady returns for investors year over year without the need to think twice about it. Over the trailing 12 months, Microsoft has generated $143.015 billion in revenues, which is just under $20 billion more than in 2019, and their profit margins on these revenues are fantastic. Gross profits of 67.7% and net income of 30.1%. These are stellar figures that make Microsoft both a leading tech company, but also a great long-term growth investment. Regarding their balance sheet, Microsoft is an absolute powerhouse of a company with $301 billion in total assets, $181.9 billion of which are current assets, and $136.527 billion of this is cash and cash equivalents. I mean, this is a tremendous amount of cash to have on hand, being one of the reasons why Microsoft is among the highest cash hoarding companies in the world, up there with Apple and Berkshire Hathaway. Their annual year-over-year asset growth is also very nice, and the company has a current ratio of 2.515, which is great, as you most likely are aware of from watching all my company analysis videos. All in all, Microsoft is a fantastic company that's poised for growth over the coming decade, as there's an increasing demand in their type of software. Their current financials are bulletproof, and the revenue growth year over year is nothing short of fantastic, so Microsoft is a great play for any portfolio if you're looking for a longer term growth position. Alright, so this pretty well wraps up today's video covering two tech stocks. I really hope you enjoyed both Good Food Market Corp as well as Microsoft, the overview of each company. If you did, please make sure to drop a like on this video. It really helps the channel out, and if you want to learn more about investing, then make sure to subscribe to the channel and hit the bell button so that you're notified whenever I release new content. On that note, thanks a lot for watching today's video, and I'll see you in the next one.